Hi, I'm Charlie Johnstone, a partner at ECI. ECI is a mid-market private equity firm investing in growth companies between 20 and 150 million of value. A lot of people, particularly my friends and family, often ask me what is private equity and confuse private equity a lot with venture capital. For me, the big difference between venture capital and private equity is about buying out shareholders, so our cash tends to go into a shareholder's pocket, and venture capital is about money going into the business to invest for new products, staff, etc. One of the changes we've seen in private equity over the last decade is a lot of private owners use private equity to cash out a minority stake in their business and maintain involvement. It's the same principle. Private equity's money goes in, but it goes out to the shareholder. But actually, we then come on board and assist them to grow the business. And I find many entrepreneurs are unaware of that style of private equity. So for owners and management teams looking to go through private equity, one of the honest things is to brace yourself for what is a very intense journey. You can prepare, and you should prepare. When we sell a business, we tend to prepare for 12 to 18 months before an exit. But no matter how many times we help prep our teams and help manage their expectations of how intense it's going to be, it's more intense than we expect. We've also found over the last decade that intensity has increased. Part of that is, as private equity investors, we are very data hungry. There's an apology there, it is who we are, but actually if you're dealing with us, you've got to understand that. We're very data hungry, and therefore the better prepared you are, the easier it is. But it is very intense, there's no getting away from it. Hopefully, the right businesses which engage with private equity, which are well prepared, get through it cleanly and quickly. They also should get real value out of it. We're spending a huge amount of time, money with very bright people to try and understand the business, the market, the management teams, and also the opportunities, some of the risk in the business, but where else can we go? And if you can suck in that information during the process to help add value after the process, you can make sure that intense and what is really grueling for some teams can add real value to the business. So a lot of businesses engage with private equity. The honest answer is not all the businesses who engage with private equity will go through a process of looking to do a private equity deal will succeed. Many of those processes will fail. At the moment, I say that's a lower proportion we've seen for a very long time, which is good. Businesses are better prepared, advisors are better, but still businesses fail to get the value they want or consummate the deal they want. And that is very painful. For the owners of the business and the management teams, that can be really painful. One of the first things to do is, once that's happened, is step back and try and understand honestly why that has happened. Has it happened because there's a mismatch between price expectations and what the market's willing to pay for? And if that is the case, why is it? Quite often that's because the company, the management team or the founder haven't articulated why the business is really valuable. Quite often that comes back to they don't have the data to demonstrate it. Well, the best things you can do then, go back, believe in your business, gather the data, demonstrate to people why you really are worth that value. There are other reasons why things don't happen. Not all private equity is the same, and like every industry, we are a spectrum of people with a spectrum of integrity, to try and be as polite as possible, and there are people there who will not deal fairly with individuals and change the goalposts later on, and that causes a huge amount of pain and anguish. But to be honest, if you come across people like that, it's better to stop. It's better not to get in bed with someone who doesn't share your values. Stop, pause, start again. What I would urge you, if you're a founder or a management team who's gone through that process, not all private equity is the same. Step back, get some good advice about who the good guys are and try and deal with them.